The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And we started off by posting the chart of the Treasury bonds today because we hit a very critical number in the T-bonds. We had a three-drive pattern coming in at the 50% retracement of our last major low. It's a really nice pattern. The bonds have moved almost a full point. And what's unusual is that they're moving up and also with the bond, with the stock market. That in itself is, quite amazing. So we'll see what happens. I was listening to Basil's show, and, he talked about the markets always being right, and people are often wrong, and that is true. The market is the one that's right all the time, and that's the one that you should, pay attention to. We are coming into a very, very large cycle dates coming in this weekend on starting actually tomorrow the 9th. Then we have the solar eclipse and the new moon on the 10th. And so on Monday, that's going to be the day where I am going to bring out the guns, the 22 rifle, the 30-06, the BB gun, everything I got. I'm going to be looking to going after the short side here for one more time. We're going to walk through some of the things that I see here on a seasonal basis and also on an astro basis because it's very important to look at some of these things. And we have a really interesting thing about this sell in May and go away. I'm doing a new book, and my co-author, Shane, has done some work with the sell in May and go away, and I'm going to post that in here. The whole write-up, I don't want to put all the pages in here, but it basically shows, the statistics behind the sell in May and go away. Actually, the statistics are on the other page, but this shows you that the market, usually tops during the May period and then goes down and then has the summertime rally and then the big October drop. And this goes back over many, many cycles, well over, I think we did 108 years on this, and so it's gives a very strong sample size. So that's something that I think we really need to pay attention to. Now, in this week's letter, I also posted the sell in May things that have happened since 2007, and the last four have been pretty much spot on, for really good corrections of at least 10%, and we'll see what this last one is. This is a big. I think this is a huge top coming in here, folks. I'm going to show you some patterns that I see happening in the New York Stock Exchange Index, and believe me, these things could just take off and be like 1999 and 2000. That's always a possibility, but right now, it's very, very orderly, and that's pretty much what I'm looking at for this. But selling in May has been a very important seasonal that has worked, incredibly well, over the time period, and the statistics behind it are really amazing. If you would have, bought sometime in the fall and held till May, you could have made 8 or 9 times your money. But if you'd have bought in May and sold in November, you would have lost money. So the statistics are there. What we have to do is try to refine the timing, and I think what we're doing is we're looking at the astrology thing to maybe give us a little bit of timing here. But you got to wait until Monday. There's no reason to stand in front of this little puppy because it's just it's not really worth it. So we'll have to wait and see. On the long-term chart on the Nasdaq weekly, it's completing a three-drive pattern. These 1.27 expansions. In fact, we're just a tad above the 1.27 expansion right now. The timing date is it should be over the weekend. You should give it some time. The reason why is this is Wednesday, folks. The market's been up every day. We're probably going to be either unchanged or down a little bit tomorrow and up on Friday. No one in the whole world is going to get a sell signal on stocks, these mutual fund and hedge fund guys, on a Friday of an up week and in an up month. That's just not going to happen. So you really want to wait till Monday. By then you'll have a better chance, to quantify, the price that you want to get in at, and then you'll have a better opportunity, to really, take a look at it from that point of view from the short side. But I am going to look at it from the short side. Now, I'm going to post into the room the chart on the Russell small cap because it is completing a big butterfly pattern. In fact, all of the indices are making, some major patterns in here, and and they have been. They've been making them since. They've been actually the real early part of this was in February, but we weren't really looking at anything in February until we got to this higher level here in the three drive pattern in the NASDAQ. But I haven't been really aggressive on the short side. I've nibbled a few times. I've nibbled a few times on the downside. I actually bought 1612s yesterday during the big break because it held right at a perfect 61% retracement, and that one worked out okay. I certainly haven't been in it for the whole move, but I made my first 6 points, which is what I was looking for, and that's what I'm looking at. Someone asked a question about the Apple. Apple has not taken out the highs of yesterday as of yet. That area around the 465 area at Apple is the 786 off of the January highs. Apple is still basically in a downtrend, and so we really need to get Apple above the 470 level, to what I think would be a breakout. But we've been up 13 out of 14 days in Apple, and so I would expect correction, to come into this area. People email me and ask me what's happening with the market. All I know is that it keeps going higher. Just like Basil said, you can't really fight it. You can take nibbles at it. And, one of these times the nibbles will be a good bite, and you'll get a really good move out of it. But until that time, you're going to be, fighting the major trend. It's easier to buy the dips, but the problem is the dips are very, very short. They're only like 10 S&P points. We're having no volatility in there. We're having tremendous volatility in the gold market. I mean, the gold moves around, quite a bit. I posted the gold chart as the second chart into Tiger TV today, and we had a $48 break into the low, and then we've had a beautiful 61% retracement from the high to the low, stopping exactly, at the 1470 level, and that's backed off some. The bonds were, really a screaming buy down at that 146 area, and they've moved. Well over $600 or $700. So you've got to, look at other things when you're looking at all the markets, because you just can't trade one thing. If you specialize in one thing, you better be very, very good at it. The old adage is, if you put your eggs in one basket, you better watch that basket, and I think that's important. I frankly look at about 14 different things: the 6 major cross rates, the major commodities, crude oil and gold and corn, wheat, beans, and Treasury bonds, Treasury notes, and those are the things that I put most of my effort in order to try to make some money at this. Now, I know we're getting ready for a break really quickly. I'm going to put a couple of charts in here because this New York Stock Exchange Index, there is a gap in the New York Stock Exchange Index from the Christmas Eve when we had that. Now, there's no other gaps on this chart that leave a big move like this other than the one that we had way back in May where we had the big island reversal. That was when it was coming in exactly at the 786, and I think we'll even fill that one. That's down quite a bit, but I'm 100% sure we're going to fill the one at the 85.61 area. If you go back and look at this chart, there's just no other places, what we're looking at on here as far as a good place to look at it. Someone asked a question about the agricultural futures. I think the easiest thing to trade, folks, is the Forex markets. They are by far the easiest because they're 24/7. The euro is 1,000 times bigger or more than the E-mini S&P, and the pound is good, the Canadian's good, the Australian's good. They're all really, really good. So we are getting a move down in the corn and the beans, and that's what we're looking for. And so we'll be getting very, very close. We're going to have Rich Anderson on the show tomorrow to discuss some of this, but it's doing exactly what we wanted it to do. It's bounced off the numbers correctly, and I think that's proof that the agriculturals are as easy to trade as the currencies. The problem with the agriculturals is they do trade overnight, but the volume that they have there is very small. If you're going to trade a large size, 20 or 30, 40 contracts, you might not get filled on all of it because it does get a little thin, during that time. So keeping that in mind when you're watching the commodities. We'll cover some of that tomorrow when we're watching it. What I wanted to do, and we'll start it right now, but then I want to be able to finish it here before we finish the mid-break at the half hour, and that is I want to look at the New York Stock Exchange Index going back to the time in mid-March, around the 12th of March. Since that time, we're making an expanding triangle is what we're doing. It's really perfectly symmetrical. We've got the 1, 3, and 5s expanding exactly like they should be. It's going to be very, very interesting. I want to comment about this because this pattern is one of Gartley's favorite patterns. It was known as the T6 pattern, and it's done an incredible job of picking, some of these things that we've watched, through the years. Now, I will have, when we come back from the break here, I'm going to have a chart of the DAX on a weekly. That's the German stock market, and I want to show you this pattern that we have forming there, and you'll see that it has. In fact, I can do it right now because we have a second to take a look at it. But we're having the same pattern happening with the DAX on the weekly basis as we are at the New York Stock Exchange on the weekly basis. So all the markets from Europe, well, not all the markets, but Germany and the U.S. are in step with this same pattern. So if this pattern fails, that means, we're going to be living in Camelot for the next 8 to 12 months. But boy, we've got a really, really big cycle coming here in the next couple of days. I think the lunar one's probably, the new moon is probably pulling it up, and we'll see if that's the case. Remember, the new moon is supposed to be a buy, except when it's making a high on the new moon, and then that reverses, to be a sell, and we're certainly coming into a new moon high as we approach Friday. So we do have this DAX doing the same reverse. That's Friday. That is the solar eclipse and a new moon. That's what we have. We have another lunar eclipse and a full moon on the 25th. We had the same thing in April on the 10th and 25th. We'll take a little break here, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to be talking about the silver market and gold market. I posted that into the room, and we will take a look at that. I did an hourly chart because we can go back and see it very, very clearly. Now, silver is far, far less liquid than the gold. It's about 1/6 the liquidity, and we hit the 61% retracement in silver at the exact price at $24 an ounce today. When we hit the gold at the 1470. So both of those came in exactly where they should have. We need to get them above that price in order for them to start moving a little bit higher. So we'll see if that's the case. Again, I want to talk about the astrological things that I'm seeing here. They do not happen until Friday. They start Thursday, but you've got Friday, and like I said, it's going to be difficult to have a very much of a sell-off on a Friday because we're in an up week. So it would take something really dramatic for that to happen, and that would really tell us that there is something really happening. May has a very high probability of being a topping month. I know people are making fun of everyone that's talking about sell in May and go away, but that's a very, very strong statistic, and I think you have to pay close attention to it. That's basically the bottom line. The other thing that I wanted to mention too is that I'm doing a webinar for all of my newsletter subscribers on May the 15th at 6:30 in the evening, and I'm going to go over what I think are the 3 best trading opportunities over the next few months, and give some ideas on the best way to possibly trade those. And I'm going to tie that in with a few little teaching things of what I do with the markets, because it's basically probability-based and risk control, and that's what I think is important. Now, the other thing that's really important that I think, and believe me, I feel very strongly about this. TFNN, Tom O'Brien has come out, and David White have come out with the art of the charts. This is the most amazing Gartley pattern. It searches out Gartleys and butterflies and puts the volume in with it. I haven't physically used it yet, but I am going to try it. It's only on stocks. It's only for end of day, but it really has some fantastic possibilities. I talked to Steve Rhodes about it. He agreed that it does have some really good things when you're looking at overnight charts, because it searches so many of them. And from what I've seen, it does a really good job at isolating, what the patterns are, and that's, what we're really trying to do here. Tom is giving a webinar, I believe, tonight, so if you contact TFNN, you can hear a free webinar about it, and it would really be helpful to watch this, because the Gartley pattern is that's the bread and butter trade of all technical analysis. I mean, a lot of them are good. We have, butterflies, head and shoulders, cup saucers. They're all technical patterns, but in my opinion, the best one is the Gartley pattern, because you are buying in the direction of a trend. You're buying a lower bottom or selling a lower high, and this is what this software picks out, and I think it's really good. It takes a lot of the mystery out of it, and it scans 5,000 charts, which I can't imagine anything doing it that fast, but it's really quite amazing. They have raised the margin. I talked about this before. They've raised the margin on gold and silver. Gold is now up to 7,000. Silver's at 12,500, and that's and silver is a 5,000 ounce contract. So you're looking at a $60,000 contract for silver, and with gold you're looking at a contract that is worth $146,000. So you're getting a lot more bangs for your buck when you're dealing with gold, because you put up 7,000 and you get day trade margins on that, which is pretty good. So it's much easier to trade the gold and has less slippage. And believe me, silver slippage can really be very, very tricky. Because if there's no order setting in there, they can jump at 15 or 20 cents, which, $750 or $1,000 without even batting an eye, where you're not going to have that problem with gold. Gold trades, tick for tick. It really does incredible, way of trading the market. I mean, I watch it all the time on a 30-minute chart, and it just hits beautiful numbers and patterns, just as nice as, anything could be. And that's the thing to be trading, is trading the currencies and the gold. Crude oil. Crude oil's been, doing the same thing, and bonds have been doing pretty good. It's only the stock market that's been going straight up. So, when that turns, it's going to spank a few people, and more than a few. When we get back from the break, I'm going to talk about what I think is where the real problem lies, and I know you've heard me say this before, and that is the bond market, and that's going to be the one that hurts, I think, the most. We've got to take a break here. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we're going to talk a little bit about bonds in here because I think we have a situation that is getting very, very critical, and we will see if it's going to work or not. But we've had high-yield bonds gaining on the 30-year Treasury bonds, where the yield is only about 2 basis points, 2% between the 30-year bond and the junk bonds. I mean, junk bonds are called high yield or whatever you want to call them, but they're, basically don't have the same safety that you have with a 30-year Treasury bond. So this is the market that I think is where the real surprise is going to come in, and we're watching notes and bonds closely, and so. The bonds, trade about 1/3 the volume and about 2/3 of the volatility that we have with the notes. So one of the two is the one we're going to be looking at. I'm not quite sure whether it's going to be the notes or the bonds. The notes are, paper that is less than between 5 and 10 years. These are the things that determine our interest rates on the credit cards, interest rate on mortgage rates. That's where they come from, is the 10-year bond. And so we will watch that. Anything under 5 years, I believe, and maybe it's under 3 years, is considered a bill. That's a Treasury bill. They start at 1 month and go all the way out to, I think, 3 years on the bills, if I'm not mistaken. They're usually for banks and large hedge funds and stuff like that. The public is not involved with those. You pretty much need to know a dealer in order to get those. But the high yield junk bond market has been been going up since June. And, we're now making a beautiful butterfly pattern up in here, along with, some of the other patterns that we look at, the 1.27 expansion, and the 3 drive pattern is also present in the high yield bond market. I will say this: we're looking at the biggest astrology thing that I've seen in a while coming up. It's as big as the one we had back in Christmas Eve, which was right at that major bottom there. We had a lot of things happening at that point, and we had that January effect that was supposed to pull the market higher, and of course it gapped up hugely on the 2nd or 3rd of January and left a gap that will someday be filled, hopefully in my lifetime, which right now it looks like we've got a shot at hitting it. So this is what we're looking at. Frankly, I think if this one doesn't work, I'm going to take a break. I'm having too much fun trading gold and the currencies to fight the stock market. So I'll probably take a break and not trade, the stock market for a while if this one fails. That's coming in on Friday or Monday. So, and if it does work, I'll need to be, focused on, what's happening at that point. But we'll be watching it very, very closely here, come Monday. It's going to be a really, really interesting one to watch because we have these patterns forming in Europe. Asia is having a rally, but that's nothing more than a snapback rally from we had a bullish Gartley pattern down in the Nikkei, in the Hang Seng Index. The Nikkei has been basically straight up, since the bottom where we had the 3 rising bottoms, all the time, and that was, something that whenever you see those 3 rising bottoms, those are the ones that you really want to, to be able to be watching very, very closely. The Japanese market is, I'll put the long-term weekly on here, and you'll see, what it's doing. But we've been very, Tom was really bullish, and I was, and so was Steve Rhodes when it was down around that 75 level. We had those higher bottoms all the time. Then we had the final pullback in October, and then we had the massive run-up, and that's what we're looking. The astrological things with Forex, someone asked a question about that. We're in the process of testing them, but frankly, I'm spending more time looking at the overall economy through the stock market in order to finish this book, so that we can take a look at what we're looking at. Someone's asked me to take a quick look at the copper market. Even though this isn't the commodity show, I think copper is enough of a parallel, it used to be anyway, with the stock market. The correlation used to be better than 80%, but now the correlation is very, very poor. We're having a rally, of course, but it's been very, very weak. The rally is we've come up about we had the bottom that we wanted to see down around the $3 a pound level. That was the double bottom that we talked about, and what we will look at here is the rally that we're having now is just about 50% off of the high that we made, back in February. So, we've gone straight up in stocks, and the copper has, finally had a rally of going off the bottom. We have to, give a lot of credit here for the Tiger Trading Room, Mr. Zitao. John did a great job of calling that bottom in the copper market down around that 305 a pound level. The old previous low that we had was at 297 way back in September of 2011, and since that time we've been in a down. We had a nice rally then, but since February of 2012, this market has been under a great deal of pressure. And in February, we highlighted those triangles that were in the copper and compared it with what happened in 2011 that you can see in Tiger TV here, and those worked extremely well. Copper dropped well over 65 cents a pound, and that, I think, it's just a start. I think we're going to go lower, but we'll see, what this next rally has. We've had a good, strong 6-day rally in the copper, and we'll see if it works. Someone, talked about the astrology just a little bit. Folks, the astrology is nothing more than the same probabilities that we're trying to do every day with the Gartleys, the butterflies, the ABCDs, and all these others. That's really all it is. It's nothing more than that. And, once you realize that, then you have to have, the ability to take the responsibility for the trades and quantify the risk, because you don't know which ones are going to work. Nobody knows that. I've had 3 losing trades today, and I'm still ahead on the day. And that's mainly because of the bond market and the gold market and the Japanese yen. So even though I've had some losses, I've had 3 winners that more than took care of the 3 losses, and that's what it's all about. It's all about probability and risk control, because no one can tell you, what's going to happen next. You really can't. And, no one can tell you how much you're going to make on a trade. So the only thing you can do is focus on how much you have to risk. And if you focus on that, then you'll be far ahead of your competitor, because they're out there thinking about how much money they want to make, and you're thinking about how much money you don't want to lose, and that's the secret to staying alive in this business. Winners think how much money they can win, and losers think how much money they can... No, wait, I did that wrong. Winners think how much money they can lose, and losers think how much money they can win, and that's why Las Vegas is, so very, 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 very popular. I've had a request to talk about Apple for just a second, and I will. I'm going to post the chart one more time. I put it in here so many times that I know that it's out there on the internet too, in the YouTube thing. I don't know how YouTube works, but someone told me it was out there. But anyway, we were looking at this ABCD pattern in the Apple, and that went back on the long-term weekly chart. It bottomed around 385 to 390. We've had the big move up. We're now at the 786 retracement of the high in last January. We're up so many days in a row here that it's really difficult to chase this market because you're still in a pretty big downtrend in Apple. I know we still have outstanding long June calls that we bought at 22. And, if you bought the stock, I recommend getting out of that stock at 440 to 450 level. That was the 786 off of the April high. And, that to me was a completed trade because you had made at least 4 times what you were risking, and that's the secret. The last part of this is you just hang on and tie your lasso to the stirrups and let her rip because you don't know where it's going to go. The 382 retracement of the move from 703 in Apple down to the 385 level, that comes in at 510. And believe me, if we can go from 394 to 464, $70 in a matter of 10 trading days, we can certainly cover another $50 in another few trading days. So it's not it's not unusual to see that. We would like to see a pullback to 382 and maybe give another buying opportunity, but frankly, it's pretty hard to buy it, this many days in a row. Go back and look and see how many times Apple has had a run like this, and you'll have to see it going into that high at 703 in order to, catch something like this, and that's the key of, what we're watching in here. I want to bring out a couple other things that I think are of interest to us, and that is, when I do the stock market analysis and everything, I always try to see, what the other markets are doing, the Dow Jones Transportations, and, we're having a gap, if you can believe that. We had a gap in the Dow Jones Transportation, and for some reason I have a study on this chart. I never use studies. What happened here? Okay, let me get rid of it. Okay, if you give me a second here, we're making a beautiful 3-drive pattern. Also in the Dow Jones Transportations, I have to spread it out a little bit so we can see it a little better, and I've got to take out the other markings that I've had here, and then we'll put this in. This is another interesting one because it just gives you more information that we're getting really close to some type of a major top here in all of these things, and that's going to be very, very interesting to watch. We had strong support come in down at that on the transportations on the 15th. That was the day we had the big sell-off in gold. That was a 786 Gartley buy signal in the transportations. And since that time, we've had a big move up, and now we're finishing a 3-drive pattern also in the Dow Jones Transportation Index, which deserves our respect too. I'm going to be doing more work on these, of course, over the weekend and trying to tie it together with what's happening with the overall market in the with the astrology part, to put the cycles together and map a strategy out, pretty much like I tried to do with Apple. We watched Apple on the way down, and, we were very patient. We were saying that the target was definitely going to be somewhere around 394, and just looking at time and price, knowing diddly squat about anything about fundamentals. I don't do that. I don't do any of these things. It's just technical stuff, that I'm looking at, and that's why if you watch it that way, you'll be far better off than if you, try to listen to the fundamentals that are there. Now, on the Dow Jones Utility Index, it's still having some problems. It's actually down today, with the Dow being up 109, and we came within just 4 points of the 1.618 expansion on the Dow Jones Utility. So there's a little bit of divergence there, but not too much. The key thing to watch here is that we come in to Monday morning, we have to be prepared of what we're getting ready to do. I'm going to try to do some of that tomorrow on the commodity show, because the S&P is a commodity, and I'll be watching that, and I want to be able to do all the cash numbers to make sure that these patterns that we're looking at are not being decimated, and they seem to be fitting okay, but we'll have to just wait and see. I believe strongly in the cycles that are coming through here. They're not just my cycles. I've shared, other people have shared some really interesting information about what's happening coming in here on the 10th, Arch Crawford being one, and our friends at Erminometry, Bill Ehrman. These fellows I really respect, and the numbers that they're looking at, point to something really significant happening here. It might not happen, but the risk is going to be very, very small, and the profit potential could be quite good. Just like Apple. We didn't know it was going to stop at 394. We assumed that it did, and we had the probability that it was going to, but in fact we don't know for sure until it hits that point that it's actually going to be doing that. So we'll be doing some of that tomorrow, and we will be doing again on Monday too, because by Monday we're going to have more information, because if we're really, really strong on Monday, that's going to tell us that we're most probably looking at something that is far more bigger than what I originally anticipated. So we'll look at the. Someone's asked me to take a look at the crude oil, and that's not a problem. I can certainly do that. I don't know if I didn't pub. I think I did. I think I put a crude oil chart in there, didn't I? I thought that I did, but maybe not. I'll just put it in again, because we're looking at pretty much the same thing that we've seen before. Let me put the update it, because I haven't updated my crude oil chart yet, and we'll get it running here. Only take a second. We're coming into lower tops in crude oil. That's basically what we're looking at. Nothing more than that. And if we can get moving on crude oil above the $98 a barrel level, then we've got a chance. But frankly, all we're doing now in crude oil, I want to put this lower tops in, because that's what we're having right now, and I want to show that because it's I think it's important. We got to take a little break here. When we come back, 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're in the final furlong of the race, I guess. And we had the Kentucky Derby last week. No one even mentioned the horse that won, the Orb. You know, the Orb of the moon cycles and all the cycles that we look at. But nobody mentioned that, and that's probably because I didn't bet that horse. But I did have a little piece of something in there, the second horse, which is Golden Soul, because I like things that are golden, things that are related to gold. And so I had a little $2 saver on that one, so that was fun. Anyway, we're looking at the dollar index, and then we're also going to look at the euro. The dollar index has held up extremely well, and we will be looking at the euro next because we're taking it on an hourly basis. And today's high came in exactly at the 786 of the high that we made, back on May the 11th. So, that's what we're looking at. If the euro happens to get above the 132 level, then all bets are off. But if that's going to happen, that means that the dollar index is going to have to break below 81.50, and I'm not sure that it's going to be able to do that. So we'll be watching it, closely in the euro above 130, 132.30 or so. And we'll be watching the dollar index if it makes above 81. If it goes below 81.50, that would tell us that the dollar is really in trouble and will most probably, be screaming higher in the euro. I don't see that happening, but these are the warning signs if they do hit into that time frame. So that's the British pound that we looked at last week at the 156 level. It broke down to the 154.12 yesterday. and we rallied back to the 786 retracement of that move today. The first profit objective on that was 100 pips, and we made that easily. And now you'd have your stop at break even right at around 156.02 in the British pound if you were watching that particular trade. What really amazes me more than anything else today is the fact that the bonds have made just a very, very small retracement, only to make the 50% retracement level, folks. And believe me, I am probably one of the biggest bear on Treasury bonds on a long-term basis that you're going to find. I'm just not. I haven't entered the market on the short side. In fact, I'm long right now because I bought it when it tested that 146 level. I posted that into the charts of TFNN early this morning when my show started to show the three-drive pattern that was happening on the hourly chart, and we were making a 50% retracement. And those are the things that help me set up, risk parameters of what I want to look at. So as long as the bonds can stay above the 146 level, they've got a really good chance to rally up to at least to the 148 level. That's another full point or so from where it is. And there's a slight possibility, that if the market does roll over, the stock markets, there could be one more flight to quality in Treasury bonds that could make things move. We're going to take a little break for the end of the day. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.